All right, welcome to Thursday's Q&A with Mark Ritchie, Brandon Hedgepath. Plenty of questions already coming in, and it's been an interesting market. Obviously, continue to be selective with some trades working, some not. A decent amount of setups, but definitely a lack of follow through, at least on balance across the board. Uh, so let's get into what you guys are thinking. We're going to just go right in an hour, hard stop at top of the hour today. Um, First question, Jason was asking just about the AEHR trade. I'm sure we have a few because this looks a little short. Look, we're sort of cheating on a low cheat within what looks to be a power play setting up here. And Mark talked about this a little bit if you were in the analytics like a webinar yesterday, and Brandon and I were saying, there's a number of these type of stocks right now where if you look sort of on your high RPR, high RS type screen, you see a number of these stocks that have just moved. This one, Marvell, Intel, ALAB, AEHR, what's the other one? ASML, or excuse me, not ASML. There are a number of these stocks with big earnings where capital is clearly coming in. So we're just trying to play this theme a little bit and see if we can, get in a little bit early, if you will. This is where we took a small position here as well as this is coming up. But if it's really that strong, it may just go. This is where, but now, or we may get more of a cheat or low cheat, and then you look to add. Just trying to play with stick with the momentum. Similar setup in HUT. It's really the same dynamic. Um, so Juan's asking about, or talking about, saying his personal traction has seen some improvement today. Let's say hypothetically you were in ATI, HS, HP, TH, AMAT, and stopped out. There's obviously a healthy number of stocks in the focus. What do you do now? Wait and take a couple pitches, buy smaller buys to get a feel for the market. Finish the week to see the earnings reaction for the Mag 7 or something else. Well, I definitely wouldn't do the latter. Exactly what you described. Okay. And we call this kind of the zigzags. You got some things working and some things not. Listen, if you're not in any positions that are working, how can you increase? This is exactly why even last week where, some people were saying, "Oh, well, you guys got really long and maybe we're not invested enough." No, you cannot think that way. In particular, in a market like this is exactly how if you take your cues from someone else's trading, you can get yourself into a ton of trouble because the only responsible way to increase risk is on the heels of some kind of success in your own account. Now, the better the environment, the more likely that you can just throw darts and make money. That's not the environment we're in, though. So, exactly what you described, Juan, is correct. You've got to find traction somewhere. And until you do, it doesn't matter what, this is where the problem for a lot of folks becomes because they passed on a stock and it worked, or they see the index doing something. Are you a stock trader or index trader? If you're trading stocks, you've got to wait for the traction in the stocks themselves. We jockeyed quite a bit in the last few days because guess what? We were riding close to the wall and started bumping into it. Well, so we jammed some things, jockeyed for a position, and adjusted. And that's exactly how you got to do it, regardless of how long you are. Um, and then you're saying you're willing to watch a couple pitches. Well, if that's you feel like my last few trades have stopped me out, and I'd rather take a pitch and wait to see if something starting to work, that's fine. You just got to be prepared to step back to the plate and take a swing again.
Yeah, or trade so small that
Trade smaller,
that
right?
at least you can keep a finger on the pulse, but it's not going to dig into your equity.
Leon's asking in reference to discussion between Mark and Mark on Monday about incremental buys in one position, where one of the main points was cost consideration, depending on the distance between the first buy and a low cheat, and let's say the handle. And then if you're too far, it would only increase your size by 25, 50%. I'm trying to reconcile it with $1 million slide from Progressive Exposure tutorial a few years ago, where you show how a position is doubled by moving this initial stop loss at the time of the second. Okay. Could you please explain your thinking on how to reconcile both views? Well, listen, they're two in the same. They're two ways of doing the same thing. My only point, Leon, was look, if your second buy is substantially running up your cost, where the math doesn't work with what you just described, then you buy a little less. This is where each one of those. Now, the slide you're talking about in the actual workbook is, I don't remember if we use it. Yeah, we don't use a particular or example or stock, but this is where each situation, you got to make that determination to go, well, how much am I running up my average costs here? Am I able to move my stop up to even and double up my size? Then absolutely go for it. Again, assuming that you're getting traction or that the setup is improving. So it was more of just if you buy the low cheat, let's just use this as an example. We buy it here. Then it comes all the way up and sets a high handle over here at 100 in the next 2 weeks. I'm not doubling that position up most likely because I'm running my average cost up too much with my initial. Now I may peel off a portion of the trade and then I might decide to put in to go really big with a tight stop. This is where each one of these decisions, everybody wants sort of just a fully mechanical standard for everything. The fully mechanical standard is each trade is analyzed down to the nuances on its own, and then you make good incremental decisions and stack those on top of each other. That's how over time the real winners separate themselves from everybody else. Oh, well, he only got 1.5% better price than I did. Well, do that 100,000 times over your career and see how much that those small little incremental decisions add up. Stacy was saying, is an analytics call, but yesterday, Mark and Brandon talked about analyzing their trades on a weighted basis. No, we've said we just always done it that way. And currently the analytics isn't set up for that. Look, the bigger point here is just that you have to understand if you don't do it that way, as Mark says, it tends to come out in the wash the larger the data set.
Right. So I'll just share, listen, Stacy, early on when I got started, the first run I had in 2010, I found that my numbers were really good, but my biggest winners were my smallest trades. So had I just been doing that in my Excel spreadsheet, I would have found that probably sooner. And it comes out in the wash as long as you have to get heavy when things start working. And I was just too slow to do that. So when I fixed my numbers, then that made sense why I didn't make as much money as I thought I should have based on my numbers, because again, my biggest winners were my smallest positions. So I wanted to make sure that when I fixed it in the spreadsheet, that it accounted for that.
Dr. Amini is saying, thanks for the teaching. A week after the market bottom, I started to buy stocks such as ARM, MXL, ALAB, MWH, AMD, MU. Since they did not give me a good MCP, I'm assuming you mean VCP, I bought smaller position sizes and most working in profit, and I kept buying more. So it sounds like you're just saying you just grabbed some of the strongest names, which is definitely not something I would do across the board. If I'm going to buy something with a percentage stop, I might do that on a first buy or buy a really strong name. Maybe we get a follow through day and there's not many setups, but I certainly wouldn't buy. Now you're saying you've got 15 positions and on full margin. The last buy was Google. I feel like I may have the leaders by the horn and not want to see them or not want to sell them too early. If the math works the same for smaller versus bigger positions, should I manage all the positions or try to consolidate? Well, look, sometimes, okay, there's a couple different issues here. Like I just said, the first one is, look, if they don't have VCPs, I'm not just going hog wild and buying a bunch of names, even if they're running up the right-hand side. And look, you're right. You may be able to catch them quick, but okay, if you use some type of percentage stop, at least that's your version of a tight stop. So that's much better than just wildly buying names that look short-term extended. If the market is bottomed, well, I mean, you could have done that with if you just want to buy this gap with a tight stop. Yeah, you look like a genius now. But is that a repeatable setup? Not for me. Do you have model books full of buying right sides that are just running up the right-hand side? I don't. So you may have gotten, more lucky in this case than smart. But look, the point though about back to if I have too many positions, well, sometimes you start with some incremental buys and then you wind up maybe with 8, 10, 12 with partial positions as then you start to ramp up. This is where, as things work, I want to give the benefit of the doubt and try and be more concentrated in certain spots. But I'm not just going to arbitrarily sell, because sometimes keeping a small position even in a stock that's really working is better than taking a big position in one that's not going anywhere. So again, manage them each individually. But look, if you're really long and things are starting to get extended, this is where you've got to just run through your worst case scenario. If everything starts to get extended on you and you're on margin, normal pullbacks may give you
might be rough.
Yeah, might be real bumpy or more than you're willing to sit through. This is where you have to ask yourself what would be normal ahead of time, and am I willing to trim something out? Now, your last question, what does it mean to jockey for a position? It's exactly what we are jockeying often when we go, wait a minute, we don't want to sit through a pullback for everything to stops, or we cannot take everything to stops because we're taking too much risk. So last week I mentioned that, look, we jammed in a bunch more exposure between CAT, Micron, AMAT. But I said, if these don't follow through, we're not going to hold them all to stops because I don't have enough cushion every time. Sorry about that, guys. Seems like for whatever reason, when I do one of my first switches, it bumps me out. So I'll use the CAT and AMAT. We basically jammed these up the other day and said we're just going to punt them because we didn't get out the barn enough, and I'm not willing to take them to stops. Even MU, I didn't want to reduce this today, but we felt like this is one of our bigger positions. We're up 15%. Now I can finance holding this all the way down to the stop and not lose. Okay, I'll take that bet after giving back a little bit more than we wanted to the other day. This is where you have to jockey the other way to say, well, I felt a little more pressure than I wanted. Now, as things are snapping back and I'm waiting, and we're not seeing robust follow through across the board. It's not like the tide is just going out and lifting everything. It's staying a little bit more selective. Well, I'm not going to be stubborn. I've got to go. I'm willing to trim a little of this out, de-risk. So anything you want to add to that?
No,
But it's sort of, you look, think of it in terms of jockeying is, the way that that comes. I'm not much of a fan of horse racing, but it's that idea that you get in the pile and you're trying to get out of the pile and find the straightaway, right? So that's exactly how we're doing it. And sometimes you've got to then override some stops if you're carrying too much risk, or you sell one position in favor of another. So that's more of these are all pro techniques, but because what you want to do is get your capital exposed to where it's most efficient as fast as possible. That's what this whole business is all about, getting efficiency on your capital. That's the whole beauty of specific entry point analysis. It allows you to know relatively quickly if the train's coming in on schedule. So we're not just sitting on the platform wondering and waiting, when is this thing going to show up? Well, that means occasionally you got to jump off a train and get on another one. Abby's asking about DHT. Is tightening below a level where it's seen several reversals? Is if it sets up here instead of at 19 level, would you be buying right into over its supply? In that case, would you like only to take a small position? Looks like volatility is close. I don't know what that means. Volatility is close. You're talking about this reversal here. And yeah, that's right. You're setting up right into this. Yeah, I don't love that. And I would certainly much rather start with a smaller position here because I would expect you got this reversal here and here. This is where you draw the line, right? You draw the line right here. You can see where my cursor is. You go through most of the supply. So that's really where I want to, that's where the stock is really contending with that level. So you're getting in below that. Absolutely, I would start smaller. Now, we may just go ripping right through, but at least then you got a smaller position. But this is where, that line is. So I would, yeah, start, maybe, you really want to get in a position. I do like that the volume is really low here. Okay, start a position. If you go blowing right through, at least you got half. If it pauses, puts in a pause pivot or some type of a cheat, tightens up, then you look to get more aggressive. Raphael saying, would you code today's purchase of AER as a pullback buy or a low cheat? Yeah, you're cheating on the low cheat with a pullback buy. This is really just this is your high RS pullback. You're trying to buy that first pullback as it turns back up. You got a decent close, went inside. Now, and the thing I like about this tactic, again, this is a classic pro buy. Mark wants to buy it, doesn't chase the gap, waits for it to pull back, and then buys it as it turns up. Exactly the way we handled Micron last week as well. So yeah, I would just call it a pullback buy. And I would call this a pullback buy in an RPR 100 in your highest relative strength situation or highest RPR situation. Sorry, going on to Roberto here. Could you please comment on your trades and Corning and AMAT, providing some insight into position sizing, stop loss placement, overall trade management? Well, yeah, absolutely. Still in a small piece of this. We de-risked a portion into here, held into the earnings. Obviously, don't love this, and are kind of moving a trailing stop because we're still above where we were buying over here. and going to move a trailing stop on and either this low or a close below the 50 on the remainder, trying to give it the benefit of the doubt. AMAT was actually where we wound up giving back more than we wanted here. Because we bought this stock right here saying we don't get it a close at it, we're going to punt it. We got it at a profit. We sort of rented some exposure. And right here we debated and held in thinking, all right, we'll just take this off at even. Well, we got more slippage than we wanted. That's what immediately says to me, all right, we got a jockey. The worst case scenario just got a little worse than we had anticipated. I have to act. That's exactly how you think as a risk manager, in my opinion. You get stung on something, move. You step on a beehive, get the hell out of there, right? Start moving fast, or figuring out where am I going to put a tourniquet on other areas of potential risk. So yeah, that's exactly how. And Brandon and I even talked about that. That's because the other question we'll get. Well, it did. This hit the stop, but in something like cat didn't hit the stop. Doesn't matter. I'm carrying too much risk. Risk trumps everything. Mm-hmm. If I'm carrying too much, I'm not taking everything to stops. And you can see how a lot of these we keep saying some of these are individualized decisions because we got some traders that are trading really aggressive, guys. Like, well, they know what their risk and pain points are. They might put half their account or all their account in one name. Well, you think they're going to take that to a 7% stop? No, they're not. So next thing, when you buy a setup based on the intraday, do you ignore intraday price action as long as your pre-planned daily stop hasn't been hit? For instance, you mentioned buying MU on the 22nd, use a 5-minute. Even if undercuts on it, is it still nowhere near the 5% platform stop you set? No. Well, look, MU was an example of, let's go back to that on the 5-minute. Well, let's start with the daily. Here's the funny thing about this stock. A few different things to mention. And look, the longer you do this, these precedents just start rhyming in your head. And we got the question, this is short. Yeah, it's short. And I said, I think this is a potential key leader. And at the time, RPR 99, this reminded me of Hood from last year. Go look at Hood. Had set up very similar, ran to the old highs and put in a 4, 5, 6 day. And I passed on it and then watched it blast off. Brandon and I were talking about a pre-market, then get a memo from Mark saying, fellas, if this thing goes, make sure we buy it. And I was like, when Mark Minervini is also seeing the exact same thing I am, it actually increases my conviction, not lessens it, that's for sure. Well, then we got the gap, and we had it teed up to, if it breaks out, was this pivot acceptable? It was. I think it was 6, 7%. Well, Mark decided to buy on the 5-minute right as it pulled in intraday. Just go back to the day here. Right here. Here. So here's your gap. What is this? This is a pull, sort of a form of an intraday pullback buy. Now, Mark is waiting for the trade to then turn back up. I think we were buying right here. And then Brandon and I decided, look, we're going to add to the position and put a trading scale on the intraday on top of the daily trade. And if we don't get it close at a profit, we'll punt those shares. Well, then, yeah, we took off right away. And then I think we even added up here as the stock was then breaking out. Coincident, the time frames were then coming together and you broke into new high ground and we added to the position again. But with the idea that, look, if we can't get it a profit, we'll leak them back out. It's incremental decisions. So we're just stacking the time frames, even using progressive exposure on the 5-minute to then push out to the daily. I know some of this, may seem a little complex, but the longer you do this, it almost becomes like a symphony where everything just sits on top of each other nicely. Or if anybody that does music and you realize like the way parts and chords and things are written, when everything's in tune and in sync, that's when, really powerful stuff happens. Look, I'd like to be longer, personally. We jammed into a position like this and then, again, started getting stung in a few other places and had to lighten up on this, even though I didn't really want to because it's acting fine. I'll make sure I answered your question there, Sinak. Derry's asking, hi, Mark. I realize I'm having difficulty identifying true leading stocks. I've heard you mention a few times that you're willing to stretch your buying criteria slightly for leaders because you recognize their strength. Okay, talking about NVIDIA and MU. Okay, how is this a stretch? This is not a stretch. Is it a short pivot? Sure. But it's not. Does it meet the criteria? Is it mid-single digits? Do we have some tightening? We got a decent sized base. You had an undercut here with a really nice comeback on volume. And how could you possibly say this is a stretch? I mean, look at these earnings. This is exactly what an institutional favorite in terms of growth looks like. And for those of you who went to the Master Trader program, fundamentals to focus on, this is a classic one. You should absolutely go back, review that section in your workbook, and then look at Micron. So I wouldn't call this a stretch. Anything that's mid-single digits with a pivot where you have a tightening on the right side of a base, that's potentially actionable. Now, are all trades equal? And just because we could here's the other thing: don't go in with opinions. Maybe we get Micron dead wrong, but we're at a position now where we de-risk the trade. That's where
the power comes from.
Yeah, you use good tactics and de-risk this thing. Love that. Let me make sure I get to the next part of your question. My batting average has been quite low, 30% of the past few years. Your average, yeah, looks like you're doing about 2-to-1. From my post-trade analysis, most of my entries did meet my criteria or from the focus list. When I look at trades outside, I usually checked in Q&A and didn't receive feedback indicating major mistakes. I also ran a back test excluding trades that were not from the focus, and the results were not significantly different. So, yeah, it sounds like you're using good criteria, Derry. Great. The issue's been the win rate. You're managing the risk reward well, and you're generally making what sounds like good buys, because it didn't say from your post-trade analysis, most of my entries did meet my criteria. Well, what percentage of ones didn't, first of all, and how much would that have improved? But then look at this lower win rate. That's a function of the more selective market.
Yeah, and that ours has been lower too the last few years than historical. So it's been we're still making money, but has not been as high as it was prior to COVID.
Taman's asking about ALB. Triggered a pullback buy 427. Is this 14% pullback too deep relative to the size of its base? No. This was, I think, yeah, you could have played this right here. Did we highlight this? I think we might have. This is right where this should find support. Again, thinking of this in terms of context, right? You got a little bit clearly contending with some supply here. There's some reversals. Again, but if this train is coming in on schedule, this pullback should be shallower than this one. So this is right where you want to potentially position yourself with a tight stop where you can know relatively quickly, is this train coming in on schedule? So far, I mean, you could have started a position right here. Then I would look to see, do we fill this out a little bit? And you can look to add. But this is absolutely go time for this name. This is where if this base is going to break out, and again, the strong hands are going to take out the weak ones, this is where they need to come in. Joseph's saying in a more stable market, would you add to a reversal recovery? And he uses JCI. Sometimes, yeah, absolutely. That's actually, now this is where you just measure and go, okay, this is still only 4.5%. And really, in the best environments, this is how we generally get more aggressive. One of two ways. Obviously, you get a lot more ideas and you just start buying them and they're working, or some of the ideas that you initially buy improve and you add to those. And it's usually a combination of both, where, okay, maybe you bought JCI here, pulls back, but it doesn't stop you out. Meanwhile, so to answer your question, how are my other positions doing? If I'm making money elsewhere, or if while this pullback is going on, one or two other stocks I have are working and I'm seeing better action. Across focus list, no, I would say we're not. So this is where how is your trading going? But this is no question. You could either buy this name if you didn't already, because it's still acceptable, or you could potentially add to it. So that's where, but based on like how things are going. So you're saying, hey, maybe the market hasn't been as stable, or you're trading not so much. Yeah, then I'd be more conservative. Robbie's saying the platform on Tuesday saw a couple of trades were cut in half for de-risking, Plow, PSMT, DNTH. Can you explain how you do about de-risking when trades were not working in that particular instance? Was there a key level that was being watched, or was it a portfolio decision more due to exposure? It was more in between the two in terms of listen, you can always make a portfolio decision to say if I'm carrying too much risk, and that's where you got to make the decision where you go stock by stock. Sometimes we'll sell one that's partially extended to reduce. or we'll sell one that just hasn't really got going. In the case of Plow, PSMT, and DNTH, none of these trains are really coming in strong on schedule. So rather than holding them to the full stop, we'll be incremental and cut them or cut half. I want to get better de-risking, but not blindly. Plow is one we kind of discussed, and this was one really could have, and probably you could have made an argument to punt a good chunk of the position here or the whole thing, because we're close enough and this was definitely high volume in reversal. This is an ominous squat here. An aggressive trader may have just punted the whole position. You certainly could have cut half, but we were close to the stop, so we kind of used that proximity risk to say, well, listen, we'll sit through it because this whole pivot was still pretty tight, but it was a judgment call.
I mean, looking at PSMT and DNTH, like again, to Marky's point, like we've been in these a while, and it's just like why, let's take some of that capital and just move it into cash, right? And DNTH, and listen, DNTH is a power play. We've been trying to give that the benefit of the doubt, but it's just getting long in the tooth.
It's getting a little long in the tooth.
Look what happened on Tuesday, right? The market came in pretty good, so it's like, well, we got to start raising cash.
Another question, Ravi's made a point and great observation saying Mark Minervini in yesterday's afternoon session showed that capping losses at around 2% improved the Dharma curve. How do you apply that to your trading? Do you start using that to pick tighter setups where the chart sours at 5%, for example, instead of 8? I'm trying to figure out how to work the Dharma curve analysis into the trading. Well, exactly. This is always why I want to favor tighter. All things being equal. Obviously, if you just arbitrarily well, I'll just stop everything out at 2%. No, that's where your timing has to be really good, because if you just pick a random 2% stop, you're just going to wind up with a win rate that's really, really low. But yes, all things being equal, your observation about Dharma is absolutely correct. So I would spend way more time messing around in the analytics section and getting a firm understanding of that. And then figuring out, is there a way that I can use a staggered stop to be a little bit tighter, but without choking? We always want to have that balance. The tighter you go, you're going to wind up choking things off more often.
Yeah, earlier Marky made the point about like that 0.5%. 0.5% added up over many trades adds up to a lot, right? Well, and this is what Dharma lets you do. You can mess around with your percent stops to see like how would that affect my trading? Because I think a lot of you guys realize or don't realize how close you are to becoming profitable if you would just make a few small incremental changes. And that's what the analytics helps you do, to kind of see that.
Synax asking about BKTI and VTRS. Could it make focus? Let's take a look. Look, you got Fab 5 green here. Right now, guys, even as I go through the screens, there's still a lot of decent looking right sides. The issue is we're just not seeing them follow through, but that can also change. This is where you always got to keep an open mind. Always be ready to act if things start shifting. Who knows? Maybe oil comes off and risk comes back on, and then all of a sudden we see. Even a couple of days ago, I was saying to Brandon, there's a lot of RPR situations, kind of like the FedEx, like lower RPR, 80, mid to low 80s, but they all big bases. They look good. What was that symbol I sent you the other day? It was like coming on a 4-year base, but it was a lower RPR. It was a lot. There was a lot of them. So certainly, does this have a right side? Is it potentially actionable? This is a little wide as I look at it. But look, I like the fundamentals here. You can call this kind of all one base, and you get this pull back. We're sort of a little. This is actually what looks to be forming a cap here. So look, keep it on the radar. I also like this volume picture right here. So I probably wouldn't have chased this gap, but if you really wanted to be aggressive, you probably could have started a position even this morning, and then see does this fill out, and you get another opportunity to add to it. Look at VTRS real quick. Probably the similar theme, I'm guessing. Again, Fab 5 green. This pivot is definitely, it's my measure on 6%. I'd love to see this stay tight for, you get one little drift here for a day, or maybe I do. I mean, I love this action. How are you just kind of stalling here right into this level and the volume's coming down? Yeah, I think it's fine. Mark mentioned in the last sections from Abby that Corning was forming a cap. I think he actually said this is sort of that, is it between a high handle and a cap? It rallied 40% from the low just a few days. Would it make it short-term extended? Yes. That's what we were saying. Could you play this? This is what I was talking about in terms of CAT, AMAT, Corning, MOD. We had a number of these little short handles, and I was saying these may start to work, they may not. This is where, and I would say it's been very mixed on those setups. Micron really worked, the rest of them haven't. Although CAT, if you sat through the earnings, also worked. It's just been difficult to be aggressive sort of across the board, at least with that theme for the time being. Now, this is really more, you need a whole nother pivot to form. But look, your observation was correct. He didn't get out the barn sort of quickly here. This is where if I was going to play this, sometimes you get a short handle like this. I want to get it. I want to get traction in it right away. So I either tend to be really tight or I give it the full room. I don't sort of go middle ground. So in this case, I probably would have, if I was going to buy right here, I probably would have used this low. I would either use this low or maybe like a full 7-8% because this was about, see, even right there, that was 5%. So this, I would have stayed away. It's just too wide. Dan saying SPY near at new all-time high at the number of stocks above their 200 is less than 60%. And it's much lower than it was in previous all-time high back in February. How much does this concern you as you ramp up exposure? Would this make you even more defensive than normal? Look, I'm going to take my cues from the stocks. I hear what you're saying. Those numbers can change. And look, the observation that, okay, hey, the market has come back, but we've got a number, in this case, say 40% of the S&P is, in a bear market, meaning they're trading below their 200 days. Well, yeah, I want to see that improve. And what you're speaking to is part of the nature of a more selective environment. So are we going to get that to broaden out? But I'm not going to wait for that metric to improve. I'm going to get in the ring and see if I can, in terms of the individual stocks, and see if I can get some traction. Because if you wait for that number to really improve, then everything's gone. By the time 80% of the stocks in the S&P are above their 200-day, I mean the leaders are so far gone, you've missed everything. And I'd be more concerned if that, let's say the S&P goes, I'll start getting concerned if the S&P goes higher and we start seeing that divergence, those breadth divergences. Like even right now, and look, follow Mark's weekend work. He'll cover all this stuff. He covers all those things that really matter in real time. And I mean, every time he's highlighted a serious breadth divergence, the really classic one was in late 22, where he was just saying for a month or two, like, guys, I don't see the market withstanding this type of a divergence. And then sure enough, we went into a bear market. You'll be tracking all that stuff, or at least the things that really matter. But where I would get concerned is if we start making regular new highs on the S&P and then we see that getting worse. So we see that divergence of, or in the NYSE advanced decline line. Maybe the NYSE starts making new highs, but the advanced decline line doesn't. And you get that, well, it'll just tell you that the herd is weakening even though prices are going higher. Then I'll be getting more concerned, or I'll just be looking to start nailing stuff down into strength. But we'll see less and less setups. So we'll see even less things working. Taman saying, was a pullback by entry possible for NEXA? Let's take a look. I mean, is this a pullback buy? Yeah, sure. Here's what I like. You get a good close here, and then you go inside for 2 days. So I would have preferred to see this come out kind of clean, where it opens inside this day, and then you could even, a real aggressive trader, you might start using lean on the inside day and then add through here. Let's just measure though. Okay, 8.5%. Again, don't love that. It's a $16 stock. A little lower price. Is this an oil and gas name, I'm guessing?
I would guess so, yeah.
I don't know what this news was. I might look into that too. But certainly, yeah, if you want to own this name, this is a pull. And I like how the pullback buy really is, you're really just playing a handle. But the pullback buy is inside the handle. So that's a good use of the tactics. I would love it though if this entire width of the bar was 5% and this was like 2. Instead, this is about 5 and this is about 8. But it's a good eye, and I like the look. I also like how this entire pullback is on as the volume comes down. Yeah, you had one above average day, but you got a decent close, and you see I get this cluster of decent closes here. Then when inside, this is where again the train should start coming on schedule if this is indeed under accumulation. Eric saying, please, all right, question on jockeying. We already covered that, at least I hope. And look, I understand that even the concept of jockeying is nuanced. Yeah, absolutely. There isn't a science to jockeying. It's a combination of statistics, managing risk, and experience all in real time. Eric saying, please grade my 430 RBC buy. Let's check out the Royal Bank of Canada. No, RBC Bearings. Is this a bank?
No, I think it's like a material processing company or something like
Well, I
that.
like this. And look, this looks pretty good here in terms of, you're buying it today. So yeah, I see what you're doing. You're sort of kind of, as it turns back up, you're either playing this as a form of a pullback buy through this handle. Let's see how tight it is. Yeah, quite tight.
Yeah.
I like it even better. I mean, look, I can't really say a whole lot bad about this at all. And this is the type of situation.
Did you look at this on a weekly?
I did not. Good catch. Yeah, it looks good.
Yeah, this could actually probably be on.
Yeah, this would be another one that could go on focus, but like you said, we've just got a lot of names on there and not a lot of great pin action, so we're not just going to keep stuffing names in there. But this is another one. If you come back up here to these highs and then tighten up, you could potentially add.
He's asking about Viking.
And Viking, what would you need to see to buy Viking? How do you factor in recent supply? Yeah, Viking is a situation to me where I don't like it. Starting the week here, this is a name I wanted to. I had this teed up right here. We were going to start a position through this pullback buy, highlight or potentially buy it for the platform as well. This was, one of the A-list ideas for that day. It gapped, didn't touch it. Then it broke out. Okay, maybe I missed it. Pulled in. This was right where I was interested in it because this pulled back right to these old highs, very normal. And then went inside. This is a good look here, similar with that pullback buy. If it's coming in on schedule and see how the pullback's on lower volume, well, now it's getting a little wonky and the train doesn't look like it's coming on its schedule. So it's not as strong. Now, is this still acceptable? We're getting a little longer in the tooth and a little more back into the base. It's just not as strong as it seemed to be. I would not chase this gap. Now, if this paused here, could you look to, to play a pivot coming out the other way? Yeah, I think so. Or you look for it to build. Again, this could still build out a cap, which is just a mini little, 3C VCP where you get a 1-2 that sits on top of this base. And what I mean by 1-2 is like, this would be your first contraction. Can we get another contraction that then we can position ourselves against? Milland is asking about MSGS. Another one, stock isn't doing anything wrong. It's just the train has not come in quickly, let's say. Platform shows the earnings release date on 5/12. The internet says it's May 1st. Well, we can double check that.
Yeah, so I did look into this, Marky, and Finviz is usually where I go to double check to see if like Madison Square Garden did
official release.
Yeah, press release, and they haven't done one yet. So ours is showing 5/12 just because, and it's not confirmed. And looking at NASDAQ, I don't think it's confirmed there either. So we just have to wait and see. But I'm pretty sure it's not tomorrow. That's what I think his concern is.
Well,
yeah, there's no press release, and they've always done a press release prior to earnings. So I wouldn't be too concerned that it's coming out tomorrow.
JP saying it's been a challenging market because a lot of breakouts have been failing, but for those that have worked, he's saying Intel, MU, SanDisk, Credo. Well, again, Intel, SanDisk, Credo, where was the pivot? So just to say a stock has ripped is not to say that breakouts are working. Now, MU would be an example of one that's working. And you're pointing out rightly that some of those are parabolic. How can I do better letting my winners run more? I have a tendency to sell into strength too much. Well, look, you just got to ask yourself, if you're saying, look, I want to play names for a bigger move, I'm always financing a bigger move with profits. So start by, instead of selling the whole thing, just sell partials, or ask yourself, how much, if you want to play something for a bigger move, use Micron as an example, because this one is actually coming out of a pivot. If you want to play this for a bigger move, which is exactly what I want to do, but I'm not, here's the other thing. I don't go in with an opinion. I got at a profit right away. I had bigger size, or at least a little above average size. Now I'm at a spot where I can sell a portion of my position, fully finance this stop, because this would be very normal for this to pull back to even to the breakout still, and still be acting normal, especially if the general market came in. And I want to be able to sit through that. So I've got to ask myself, How big of a position am I willing? How much pain am I willing to take on that pullback? And I've got to run through that. You've got to run every person who's holding any of these stocks because everyone thinks, oh, yeah, I'll be fine with a pullback to the 50. Well, the stock's massively extended. And then it has the pullback to the 50 and, they soil themselves or whatever. They can't stomach it. You have to think through this ahead of time. So just always ask yourself, what would be normal? Well, this is where you sell a portion into strength. So if you're at a multiple of your risk, you already have a winning trade. Just work on then instead of selling the whole position, just sell a part or a piece or whatever piece you're comfortable then holding through that pullback. If you're going to play something for a bigger move though, or you want to play a stock for anything over 30, 40, 50%, a double, unless it's a really strong power play situation, I can't think of a name I've held for a double that didn't at least have a 20 to 30% pullback in the middle. You're almost guaranteed that. So you just have to be cognizant of it. And certainly if you're playing probabilities, you know that's coming. So you've got to position size or reduce accordingly. Tusher is asking about Finn. Look, this is just trying to come out on an outside day. You have a nice cheat forming here. This is your old pivot leakage. Personally, I much prefer this. I much prefer to see it leak off before it pops its head out, and then you potentially jump on board only to get shaken out. Yeah, now it's coming back into this level. This is where, okay, I would not buy this because the volatility is widening. This is where if I still want to get involved, this name, let's say I really want to buy it. Well, if I measure and this is still acceptable, it is. So is this still mid-single digits? And then does this fit in terms of within the VCP profile where you got 1, 2, this is still inside this. So do you still have a VCP characteristic here? I don't love the outside day look. Is this earnings though? Yeah. Okay, so on earnings, I might cut it more slack. Or because the volatility is elevated because of earnings, I'm probably not going to give it these lows. I might just buy a piece and then either stagger with a percentage stop or something like that because I always want to try and get in tighter if I can. The other thing you can do though is then you wait. Do we get even? This is where I like to use the pause or even a shallower pullback. Maybe we get a 1-day pause here like that. And then I would shoot against that as it comes out. Because if it's really strong, it may just come blasting right through. Or you may just get a shallow little pullback or pause that then you can look to back into that, in terms of your risk. So that's how I'd handle that.
He was asking about Walmart too.
Oh, Walmart. Sorry about that. WMT. Yeah, this is just a pullback buy. This is here's your pullback buy inside of what's a handle. Again, so you're cheating on the handle completing and using. You got a good close here yesterday, starting the position right as it comes through. Now, if it tightens up again, you look to add. And this is kind of classic where you get, sorry, I just want to point this out. 1, 2, 3, 4 lower lows, especially on a highly followed name like Walmart. If this is under accumulation, this is where support should show up. And certainly, because we'll probably get questions. Are you trading off the 50? No, that's coincident. But we do want to see, we don't want to see if this stock's really, strong, it shouldn't close below the 50. Mark is asking, is there an argument to be made to have added back this morning the positions we took off yesterday on Google and CAT? Do more of what's working? No. Look, especially post earnings, just arbitrarily adding back post earnings, you're widening your risk, especially if it's working. The challenge with the earnings is we want to manage the risk. So then just adding shares back as the stock is gapping higher, I never do that. I understand that. Well, we always want to have our positions back in, after an earnings announcement. But look, I could count on the only time I tend to buy a stock. What was that one earlier? After earnings that we just looked at, PHIN. Is that what it was? Mm-hmm. This is how I would do it.
It's still within a base.
As it's still within a base, and the earnings is coming out, and now you're through it, and I can buy it like sort of coincident with a pivot that still makes sense and a risk point that works. Yes. But not just arbitrarily. We cut those positions because we didn't want to take, that outsized risk. Well, just putting them back on right after an earnings announcement, especially once the stock is gapped up, you're widening your risk,
And what if it fills that gap and you
which
stopped out? So
happens.
you had a winning trade that turned into a losing trade. I mean, Amazon gapped up this morning too and filled, and sold off almost immediately. So we don't know, and we don't want to increase that risk.
Um, Leif is saying TER. Sold a quarter on 427, sold three quarters on 429 early in the gap down. Too much volatility at this point here. Well, you didn't say where you bought, but I'm guessing look, if you were buying here and then caught this gap, I would have never chased this gap. Or maybe you were buying here on, again, sort of that theme of the short handle. But you sold, let's just go over yourselves. 424. Okay, so you sold there. Sold three quarters on 429 right here. Oh, no, right there. Too much of a, or sold the rest here. Well, certainly, if I was in this from over here and was going to hold into these earnings, yeah, this absolutely would have stopped me out. This is too much. And you're taking out the 50, and on this close, I mean, absolutely, the fact that it's snapping back. I mean, look, you handled it how most likely how we would have handled it too. Again, you didn't say where you got in, but listen, sometimes you get torpedoed on earnings, you sell. Even small, big position doesn't matter, or any type of gap. This would be most likely. I would have been, anything through this level. I'd probably been selling on the open. So I would have been selling, right on the open. Glenn is saying, love to hear more about your processes. What do you do pre-market, post-market, especially your intraday activities? I don't know, Brandon. I mean, you want to cover that? We've been doing the same thing pretty much every day.
Yeah, so we'll start with pre-market. Pre-market, obviously, I get into the office with Marky and we start running through our focus list or the focus list and see what's buyable and how much exposure we want to add. And then we come up with, you know, share sizes, stops, how much risk we want to add or do we not do anything. And then obviously we're setting alarms at that time as well. And then, after that, after the open, it's kind of like we're just monitoring the lists, seeing what everything's doing. Obviously, if something triggers and we're buying it, we execute the trade, and then we start screening in the afternoon, monitoring what our positions did after the close or into the close, and seeing if we want to make any adjustments, and then wash, rinse, repeat. I don't know what else did I leave out.
I don't think so.
I mean, when it's slow during the day, we'll do a little bit more fundamental research.
Or we'll read, we'll do some reading.
Yeah, we've been
Or
told.
now we play with, AI and
Yeah.
things like that or we play with the tools on the platform and, looking at post-trade analysis, all those kind of things.
It's pretty boring. And then on the weekend, obviously I do the stock analysis report, go over, kind of come up with a plan for Monday. But Marky and I kind of get up early. That's kind of when, a lot of the preparation's done versus after the close or at nighttime. So
Yeah, we had too many kids to be doing much after
yeah,
close,
it's
so
like
we
after
tend
the
to
close, it's the wife wants
family time. Right, that's
to be
right.
dad. So
Well, we want to be that too. So, let's see. DC saying, do you have general guidelines on how much is your max ROTE per trade and how much ROTE are you willing to add with open profits and willing to give back without risking principal? I mean, as a general rule, we don't want to risk more than 1 to 1.5%
per trade.
per trade for sure. But we kind of start there on the overall portfolio, even. Like if we're just getting along, we don't want to usually risk more than 1 to 1.5% when we're first just kind of dipping a toe. Now we may do that. We may do that through 2 trades, 4 trades, or 1 trade. It just depends on the sort of the texture of the market. What kind of setups do we have? How confident are we? What's the liquidity situation? And then it's always incremental from there. So even last week, we added a bunch of exposure, but we didn't just add a bunch of risk.
Yeah.
That's where we were really tight on a bunch of saying, I might have added another 150 basis points of risk, 1 to 1.5%. But did it, where we're staying really tight. We don't just nail it on the screws here. We're going to back right off. It's sort of a mixed bag. We hit Micron, and then punted Cat and AMAT, and it's sort of kind of almost a wash on the net there.
Yeah.
But this is where every now and again you nail it, and then you nail it again. And then it's like you're just running racks.
in a really good position at
Yeah.
that point.
And boom, you can really ramp up quickly. Well, you don't. You've got to jockey around a little bit, or you've got to be willing to peel back uh, until you hit another straightaway. Um, Leon's saying, what's your reference trading scale on daily when discussing MU in the 5 minute and switching to the daily? No, what I was saying is, look, okay, you notice how we're always using specific entry point. Always. I don't care what the time frame is. So my point was back to this. This is context. Again, where sometimes we use. I understand that people don't fully understand that. I didn't understand it either. So I'm sitting here going, if this was if this was a daily, if this was a weekly, here's my low risk entry. You got a little some form of a pullback buy, and then it turns into a little bit of a cheat. Well, I know where this is at on the daily already, and that I want to own it. And Brandon and I are going, well, we're going to cheat on the daily breakout. So how are we going to do that? Right here. So I just said to myself, all right, we're going to start the position we want on the daily as it turns back up. And then as this stock makes the turn, I added shares with a staggered stop right here. Well, the net percent was, 1 between these two. Think about that for a second. Then if I can get it again, I can open up the game a little bit. If things were going really well, we might have put on a boatload here because there's such good liquidity.
Yeah.
And then you finance the trade because think right here. Okay, this is not what I did, but if I'd put my whole stop on the whole line right here at 1%, I made a 3R right up to this level. I could flip out. This is exactly how you pyramid into a big position and then are able to hold it. Let's say you put your whole account in this name right here. You put 100% of your account in this name right here and flipped out 80% of it. Now you paid to hold the 20% position at a net profit. That's what I'm talking about. You can do that math though on any iteration. We did it on a much smaller one because I'm not going to put 100% of my account on any one name on an intraday. But you see how the levels of aggression can vary widely, but we're still using good tactics. And this, I know this is super powerful stuff if you can really start to grasp it. Something that we're still working on all the time, by the way. But we know that like when it's our time, we can make headway really quick in a situation like this. Leif is asking about MXL. This one just needs, where would this become viable as a power play? Well, right now, this goes on your polls list, right? This sucker went flying up the right-hand side. Another one in this, we're seeing, again, I would put this in that similar theme, where sometimes these polls or these power plays, they're lower priced or there's biotech, like there's no earnings. We're seeing a number of decent liquidity, good earnings type situations. Look, if these start setting up power plays, I don't care that power plays haven't been working. And Mark alluded to this yesterday afternoon, and it was like he was like reading my mail because I'd been saying to Brandon earlier that day. I've been traveling earlier this week and was doing my chart work, and I'm like, we're definitely seeing this theme, but we have the poll. Now we got to wait for the flag. So at this point, you just start, what's a 20 to 25% pullback over the next 8 to 10 days? And it may take some time. Look, after the COVID lows, we had tons of power plays. Nobody wanted to buy them, and they all worked. Mm-hmm. Well, I would love to see that same thematic here. All the market's overbought and all these AI stocks, it's a bubble. And meanwhile, they all put in power plays. That'd be the best setup. Joe is saying, can you break down a cap for me? Any good examples of a cap? Look, a cap is just a mini VCP that sits on top of the base and usually forms in about 12 to 18 days.
I don't have one that's coming to mind, but
this one was kind of forming. See, this kind of shook out, but like this would be, okay, is this a high handle or a cap? A high handle is kind of short. And now if this turns in, this doesn't have the VCP characteristic, but it's really where you just get a mini VCP, but it sits in context where it's just sort of on top of the base. That's why it's a cap. It's like your hat. It sits on top of your head. Jay is asking, would you look to repurchase TH if it can move through 1450? Yeah, this one kind of, kind of has a similar look to the Micron example I was looking at the other day. Could you play this? I don't mind. I like that you got this little drift and then it's coming back. This would be the example though of, okay, you're still really high RPR situation, kind of that power play that morphed and failed and now is giving you, it's a little bit of a funky low cheat. I really don't like this volume though. This is what's keeping me away from it. And wasn't this a secondary?
Secondary, yeah.
Yeah, that's probably why it's
It's trying to chew through
it's
that.
trying to chew through it, but this is where, especially because of the secondary, but either way, oftentimes when these power plays or these situations, then they issue a secondary. It sometimes what I say it takes the starch out of the trade or the momentum because you're bringing in supply. So if it can't get through it quickly, I would just leave it alone. So you could easily start a position here, and this is where I would be tight. I would go right at yesterday's low, and if I get it again, I'd probably peel off a piece and then free roll the rest. Let's get to a few more questions here. We did get through a decent amount of them. Um, Lance is saying it'd be nice to offer an advanced MTB program that removes a lot of the basics, including fundamentals. My opinion focuses on more advanced tactics. Well, listen, that's one of the things we do here. I know, look, you absolutely could send a thing to, Mark and Bob about that. And there've been some different ideas of maybe doing some form of a chart school or where we just really dig into some of the nuances. But look, I sat here for the better part of how many years just asking Mark
You
question
pick him up, yeah.
and you just pick up a lot of these nuances little by little. And the one thing I've learned in all areas of consistent application of discipline, every nuance has to be built on top of a solid foundation. So everybody, this is where how many times have you guys have probably even heard me say, way too many people are misapplying the pullback buy. Why? Because they don't understand where to apply it. And I don't mean that to be critical because it took me forever to figure out the pullback buy. I'm speaking from experience. But I don't think it's a bad idea, Lance, and we'll run that up the flagpole certainly. Um, Tim is saying, "What's a secondary? A secondary offering? That's all. Meaning that they came to the market with more shares here, Tim. Especially you see this like where like IPOs or biotech sometimes after they have really good news and the price runs up, the company then offers, well, they want to raise money. Especially, I mean, you're not going to see that in stocks where they have really big earnings and sales generally because they don't need to offer more. The stock's profitable. But it's usually, like I was saying, where in a high RPR situation, but this is where, look, I still want the price action to tell me because sometimes it's a small secondary, it gets gobbled right up and the price just takes right off. So I wouldn't just sell a name because of that. I want to see how does it act. In this case, it seems to be sitting on the name. I will do one more. Do you have a max? Eric saying max ROTE risk on overall account risk without traction. Also, do you have a max drawdown you allow per month? Well, see, we don't have a max drawdown per month because one takes care of the other. Like, so if you have, good, you don't have to worry about the max draw. I mean, we do have we're sitting here always subjectively asking ourselves, what's the worst case scenario? Are we willing to take that? That's how we always do it.
Yeah, but we don't have a
But we don't go, well,
arbitrary number
we're going to hit an
versus-
arbitrary number for the month. But we do have the more important number is like, how are we doing? How are we feeling? Where are we for the year? Context, even in terms of our own trading. Like, are we up? Are we down? Are we digging into principle at this point? We're going to be much, the more we're off highs, the more stubborn and belligerent we're going to be about trying to not give back ground. Was one other one I wanted to get to. All right, last question we'll do. Sorry, excuse me. Appreciate some of the compliments, guys. Look, and as I say sometimes, look, if we don't answer the question, just ask it again or try and clarify it. Because keep in mind, we're doing our best. We don't always understand what it is everybody's asking all the time, and we're always trying to get better. So if we don't answer it clearly, either rephrase it, and we'll give it another stab. Leif saying, hesitate to ask. Don't hesitate to ask for starters. Just ask the question. Would you ever buy a power play without a proper setup if you had a very tight stop? Just trying to get on board. Well, that's sort of a contradiction of terms. So power play is it's sort of like saying, would you buy a setup without a setup? Well, I don't know what that means. Where look, I know everybody wants to get in early and everybody wants to sort of override the rules. And my whole thing is learn the rules inside and out before you break them. But this AEHR is an example, I think, of what you're alluding to, Leif. Are we cheating? Is this a power play per the classic rules? Well, no, it hasn't. This is only 7 days if you count from here off this high. But we're just buying this first turn. This is about as aggressive as we get in a situation like this. So we're cheating on the low cheat within the power play. This is as earliest as you can possibly do it. And normally I don't even, how many times do you guys hear me say, I don't do this. Well, this situation, I'm willing to take a stab. One, because I'm starting to see this theme proliferate a little bit. And if I can get a gain, maybe I'll take a stab at another one. That's where you sort of play the themes if you can get the traction. Just like we talked about those short high handles. Well, we haven't really seen a proliferation of breakouts working there. So I'm not going to just start feeding more capital into the market through those kind of setups. All right, guys, I know we didn't quite get to everybody, but we got to a decent number of them. We'll be back in here Monday for Q&A. Look, monitor the platform, continue, stay in your own loop. If you're getting traction, you continue to stay on the ball. If you're not, reduce exposure accordingly, or don't get aggressive until you get some traction going. And we'll have the weekend study session coming up this weekend. Brandon will be doing stock analysis. Monitor the platform for updates, and we'll see you guys on Monday.
Take care.